Hey everyone, Albert Pavon here from the Pavon team, bringing our Kevin Coleman for this another segment of what would Kevin? No, I'm just kidding.
Thank you for having me back.
Yeah, we're just bringing Kevin here to just talk about a few more things regarding the lending side of stuff. So, market predictions. This is very dangerous. I don't have a crystal ball. If I did, this is where I think things might be headed. So, as we start to see a little bit more inventory, well, I'll bring this up.
Mm-hmm.
We might get back into a market where sellers are able to buy something, sell and buy at the same time.
Yeah.
So like I would say about 2.5 years ago, man, we were doing a ton of those.
Ton of them. They were great.
Right? So that the way that this works is you put your house up for sale. Once yours goes under contract, we find the one that you want to purchase. We put that under contract and we make it contingent on your sale taking place. Okay? What should that seller be looking for when they're going to be taking this into consideration? What steps would you tell them to take if they were going to sell and then buy?
Well, a lot. So the first thing, we talked in a previous segment about getting an actual underwriting approval prior to finding a house to get under contract. So I would highly encourage we go through with that program and get you actually a conditional approval on a to-be-determined home, so you can present that along with a contract showing that you have a buyer to purchase your home.
Mm-hmm.
It's considered a simultaneous closing, which what we want to do in no stress. Don't worry, I'll make it stress-free on my end.
I'll do my best.
Yeah. What we want to do in a perfect world is you sell your home in the morning, close on it early, then the proceeds from the sale, the amount that you want to use to purchase the new home, we have the title company who completes your sale, transfer it to the title company who's completing your purchase, and you go to the next title company after you sign the seller paperwork, if you haven't pre-signed it, and you sign the loan paperwork, and then you purchase the new home.
You close on the same day.
Close on the same day, yes. So then your biggest worry is the moving truck.
Well, yes, and it's going to be packed. So another successful way we are actually helping sellers and buyers get into their property. Sometimes the seller can purchase another property and not put down a big down payment and not make it contingent on the sale of their home, right? So a lot of sellers say, well, yes, if I did that and I want to take this huge chunk of principal and I want to throw it to my mortgage, will my payment change?
Yep.
And it doesn't.
It doesn't if you just throw it against the mortgage. So it'll stay the same.
So I would say 9.9 out of 10 times the seller goes, darn, I'm going to have to refinance.
Yes, and we don't want to do that because you don't want to pay closing costs twice.
Well, yes, so you're going to pay them twice in a very short span of time.
Yes.
So does SWBC?
Yes, this is a good program. It is a good. So basically the way that it works, as long as you're at the conforming loan limits, your loan size, that means in 2022 is $647,200 or less, and you're doing a Fannie Mae or Freddie Mac loan.
What's that number again?
$647,200 or less, which is a good loan size.
We're going to put it here on the bottom of the video.
It's a good loan size. So basically what we can do is, I'm going to use a number. I know numbers always get crazy. Call me on it too. But say you buy a house for $700,000, you do a loan size at the $647,200, so you're putting down $52,800. You're going to have PMI. You're going to have a higher payment based upon the $647,200 loan amount. And let's say when you sell your house, you're going to make $250,000 on the sale of your house. Well, you wanted to take $200,000 more of that money and put it down towards the down payment on the new house to have a lower payment.
To help you with the payment. Yeah.
Correct. So if your house hasn't sold yet, and we can qualify you for both your current loan on your house plus the new loan on this house, and you have the money to put down the $52,800 in this case, plus whatever the closing costs and prepaid items come out to. After you buy the house, we can do what's called a recast. So the minimum is right now, I believe, $10,000, but you'll probably do more in this case. you contact my
So what do you
service.
mean the minimum $10,000?
The minimum to put down against the principal balance is $10,000.
Okay.
You can put down really on whatever amount you want to, but you'll contact my service and department, and I'll walk you through the steps to help you. You'll tell them you want to complete a recast, which currently it's a $250 fee to complete the recast versus all the refinance fees and such.
That's a big savings.
Yes, definitely. Your interest rate will remain the same. Your term will remain the same as your current loan, and you'll take the money you want to put down and send it in. You'll then get a recast package that says, okay, you've paid your principal balance down to this amount of money. Your new principal and interest payment is still for 30 years, but it's based upon the new amount that you owe. In essence, instead of owing $647,000, now you owe $447,000 because you paid your balance down by $200,000. Well, on a 30-year loan, that should reduce your payment by $1,000 or more, for example.
So is there a time limit that they have where they could do this recast? Like, does it have to happen?
It can be a month after you buy the house. It can be 5 years after. There's no time limit.
Can they do it more than once with
Just
you guys?
twice. Right now, 2 times.
Two times.
You can do it 2 times, yes.
So twice in the life of the loan,
Yes, correct.
you could recast it.
Correct.
At the same $250
Yes,
fee.
that's the current fee.
So if a seller chooses that option,
Correct.
right, where they put, let's say, 5% down on
Yep.
the new purchase and they secure it, how long would that recast take?
About 30 days from start to finish.
30 days.
So you'll send an email to the I'll walk you through it, but you'll send an email in, get a package sent to you, wire the funds for the amount you're doing, send the package back signed and notarized, and then they'll adjust your payment after they apply the principal reduction. It's about 30 days. One other thing though, when you're doing it, we also have to do a separate request. If you pay your balance down below the limit needed to pay it down to get the PMI removed, we also can request to have the mortgage insurance removed from the payment.
At that time.
So you can get rid of that too, as long as you're paying it down to the balance needed.
Okay. So normally to get rid of PMI,
You have to.
I understand every bank's different.
Yeah.
It was always you have to wait 2 years, not miss.
You can get rid of it automatically paying your balance down. But you have to make the request, and they'll tell you when you call my servicing department how to send the request in and what to do. We try to do both at the same time.
All right. So let's just say, hypothetically, it takes me 5 years to sell my house, and I want to do this recast, but I've already paid 5 years off of my mortgage. So when I do this recast, does it start all over? Like, do I start back at 30 years?
No, you're still at the same time frame. So you would, if you paid 60 months payments, when you do the recast, the amortization schedule is going to be based off of that 300th payment. So you're just paying principal and interest at that portion of it.
I mean, it's a program that we helped a lot of sellers.
It really does, because you don't have to basically make your purchase contingent upon the sale of your home if you don't need to.
Yeah. Well, it's funny because a lot of sellers have said to me and goes, yeah, if I sell right now, I can get a great price. Yeah, but where am I going to move? And I said, and they asked me this the other day, I said, look, in the last 12 months, we've helped 75 sellers.
Yeah.
Not one is homeless right now. All right. So we always find a property for them. So I know it sounds like you're not going to be able to, but with things stabilizing now, I think there's going to be more opportunity. So we have a recast, or we have simultaneous closings on the same day.
Yes.
So there are going to be options if we do start going back into that market.
Correct.
All right.
And we'll be there to help you. We'll make sure that from a lending side, it's stress-free as we can make it be.
Yeah. Let us take that stress for you.
Yeah.
So we hope that you're finding this information useful. Don't forget to subscribe to our channel, and we look forward to seeing you on the next one. Take care.
Thank you.